I'm Jeff Wilson. I am President and CEO of Precipitate Gold Corporation. Precipitate trades on the TSX Venture under the symbol PRG. We are an exploration company focused predominantly in the Dominican Republic, where we've got 3 gold assets that we have been exploring for the last 10 years. In the last 12 months, we've acquired 2 early stage projects in Newfoundland, Canada, and those projects are seeing work as we speak today.
Jeff, good to see you. And thanks for making contact with us as well. It's surprising how many companies have gone quiet of a certain nature. But those who are busy, getting on with the business, running the business, quite keen to talk. So obviously last time we spoke was was on a panel actually, but it was with regards to last time we spoke with regards to your company, we were talking about the Barrick transaction. I assume that is done, dusted, and out of the way, is it?
It is, yeah. We closed that really essentially on the day that we made the announcement. The money hit the treasury. We put out a disclosure of the acquisition or the having received the money, and that was that. So yeah, it was a very accretive transaction for us. In fact, it was an amendment to an existing earning agreement, but put a significant amount of capital into the treasury in what was and continues to be a difficult time in the market for accessing capital without issuing any shares. So we saw it as a very beneficial transaction for Precipitate, and puts us in a favorable position of being cashed up and ready to continue working.
Okay, and obviously 3% NSR can't help either. But I guess the bit I'm interested in is like in times like this, in a market like this, we've seen shareholders kind of retrench, either get cashed up sell their shares, just really, really nervous, unsure of how to play this. You, as a CEO, you kind of run through the same sort of set of emotions, aren't you?
Yeah, very much so. I mean, I think we go through the same things with, how we deploy our capital. I mean, in challenging times, the fear is you deploy capital, you do work, you generate news, and the market doesn't care, and you're no further ahead than where you were before you started, and however your treasury is depleted. So it is a bit of a risk-reward scenario, and you have to be comfortable that the work that you're doing is going to generate something beneficial to the company. In some cases, that isn't just as simple as news releases or things that you can arm wave and promote about for a moment or two. I mean, I think for companies like ourselves, that comes down to what are we ultimately trying to accomplish here, and what's the bigger picture, long-term goal. And in times like this, when things are challenged and difficult, work can still go on. You may not necessarily move the needle on your share price from one news release to the next, but if you're advancing the projects, the goal here is that when we come out the back end of these kinds of difficult markets, we've moved the needle in terms of where the projects are, where the company is situated, and hopefully be value drivers for when the market does start to come back and look at this sector. I think it's going to be those who have, real assets that are advancing that are going to see the first benefit.
Well, I think that's right. And I sort of jokingly made reference at the beginning, which is like, you sort of see the promotional companies just go real quiet in moments like this because they're not quite sure how to play it, what to do, usually because the management team's not there to build a mine or a development company. But, maybe enough of that, and a conversation for another day in one of those panels, maybe. Let's talk about what you are doing with the capital. So you got the $5 million there. You had a little bit of cash as well, which you raised pre-Christmas. So, but what are you sitting on right now?
We're sitting on about $8 million Canadian in the treasury right now.
Right. Okay.
So it was about six and a half of that was from Barrick, and the balance was in the treasury.
Right. So what do you do with it? That's the key. I mean, because you got Dominican Republic, and I guess there's a conversation that needs to be had about South America politics at the moment. But let's go to Newfoundland. What are you going after there? I saw the press release with regards to the geophysical survey, but why do you need to do that? Why is that important? What next?
Yeah, I mean, I think for us it's important because, again, in any market environment, and even when things are like this and challenging and quiet, I do think that there's an ability for companies that are doing work to be heard, because there's a little less noise out there, and there are still investors who are seeing this as an opportunity and are looking for people who are doing work. So, we are continuing to move forward, I think responsibly, but spending money, doing work programs in Newfoundland. We've got 2 assets there, both of which are fairly early stage, especially our ACE project, a little bit more conceptual, sort of based on geology and proximity to some other known mineralization, but not a lot of historic work there. So that's a project where we'll do some, good old fashioned boots on the ground. We are going to do some prospecting, sampling, mapping, geophysics, and see whether or not a drill program there is justifiable. And that answer should come to us later this year. Our Mother Lode project over in the Burn Peninsula, sort of southeastern Newfoundland, is a little bit more advanced. It's a project that has seen some prior drilling. We were able to consolidate a number of different land packages into one contiguous larger land package for the first time. So, we've got a nice big area to work with, sniffs of prior work, and have been trying to sort of piece that all together based on historic data up to this point. Where we are now, as you mentioned, we raised some flow-through money at late last year, about $1.6 million in flow-through. We are deploying that this year. We plan to spend the majority of that, if not all of that, in 2022. And the objective there, again, is to continue on with sort of incremental stages of work that justify the next. So, we've been doing mapping and sampling. We're seeing the right kinds of geological signatures. And then we've been doing some geochemical work. Okay, we're getting some geochem anomalies, and then some geophysical airborne. For sort of big picture, what are we seeing here in terms of signatures from the geophysics? And most recently, we've commenced a ground IP, induced polarization geophysical survey here, where really what we're looking at is looking to sort of refine some of these bigger anomalies with groundwork to really vector in on where do we think the sweet spots are for drilling. And so that work is ongoing now. I expect results from that ground geophysics at Mother Lode to come out in the coming weeks. And that will ultimately be a significant tool for us in terms of plotting up what will be the first round of drilling for us at the Mother Lode project later this year.
Right. And what's the sort of general mood around Newfoundland? Because again, it kind of had that kind of promotional feel about it last year. A lot of people were jumping on the bandwagon. And again, they've gone quiet too. Do you think that, people are now understanding what Newfoundland's opportunity means, and are you still attracting the sort of wrong sorts of investors, if you don't mind me phrasing it like that?
Yeah, no, I get your point. I think that's cooled a little bit. I think just the general sort of tenor of the market here has cooled that no matter where you're working. I think that our mandate when we moved into Newfoundland was we were loath to sort of be perceived to be kind of ambulance chasing and rushing into a sort of a hot area play. So I do like to point out that the two projects we have acquired in Newfoundland are quite removed from the heart of the action where Newfound Gold is located. And they're in areas that we liked and identified for their own geological makeup. So it's not sort of how close are we to Newfound Gold. It's more about, the specific geology in the areas that we're working. The tenor has cooled a little bit for Newfoundland, I think, but and still, as other things are arising around the world, I do think that Newfoundland still poses a very worthwhile place to do business when it comes to geopolitics and permitting and access to personnel, things like that. I think it's still as good a place as any to be, and we're very comfortable being there.
Right. No, I get that. If you're doing things the right way, there's no problem with being there. It's just, I say there's some jumping on the bandwagon white noise that creates, and it's not necessarily always positive for the sector. And and I want to talk to you about it because given your background and given your market experience, you've seen small moments like that, small pockets of just your frisson of excitement off the back of not a lot, and then we're sort of sitting in a much bigger moment where if we're to get economic downturn, we're in a moment here, and obviously we'll come out the other side. We always do, but I'm just wondering, how do you play those things? Because you kind of almost got a double layer of false economic environment to deal with.
Well, I mean, there's several things that I could say about that. One is, I think that, you do have to be cautious. My fear is always that if you get into these kind of area plays and you're getting attention because of specifically where you're located in proximity to someone else, and that someone else falls off the table, regardless of the merits of your story, you're, baby with the bathwater sort of thing. So I do think that, the more we can sort of isolate ourselves as our projects being unto themselves and of their own merit based on their own geological district is important for us. We're not trying to, latch onto somebody else's success, which ultimately, if they fail, you're out with that. So for us, certainly the specific projects that we picked up, we like. In terms of, just the general market malaise here, I think that, one of the things that Newfoundland offers us is two twofold. One is it's a bit of a diversity from the Dominican Republic assets, which, as you and I have talked about before, are a little bit on hold right now for some sort of geopolitical reasons, but we still believe in. So Newfoundland gives us somewhere where we can work immediately. The second thing is, in markets like this, having access to, this is a very specific Canadian thing, but having access to flow through money can be helpful too. In challenging markets, the ability to tap into some potential financing with its own sort of tax benefits to the investors does create a little bit better platform for being able to get access to capital as well. So there's several reasons why the Newfoundland stuff for us, outside of the fact that we like the projects, adds some value and benefit and a little diversity to our portfolio.
Right, and most of the conversations I'm having at the moment with companies who are doing stuff saying it's super expensive. Inflation has really hit us, really whacked, and it'll hit different companies in different ways depending on what stage of their existence they're in. People talk about the cost of drilling. We one CEO down in Nevada and said he was paying all-in cost $800 per meter, which was like just crazy. I mean, almost prohibitively crazy kind of pricing. But has that started to come off as you're sort of seeing like retrenchment in terms of fuel pricing and things like that, availability of contractors and so forth? Is that still a problem? Or
it has come off a little bit. I mean, I think, as you mentioned about sort of the promotional aspect of our business, there's always, when things are hot, there's, the competition increases and everybody that, was in a different sector last week is suddenly securing drill contracts. So it becomes challenging in hot markets and good markets to find people, to find contractors, to get drillers, to get geologists. As markets get a little softer and people maybe start to pare back their exploration budgets, maybe slow down some of the progress on their projects, it does free up some personnel. It does free up some contractors. I think what you're seeing is better availability, maybe slightly better rates. And if you have some success either with the work that you're doing on the ground or with drilling, there's a better likelihood that you'll be able to retain those contractors for a second leg. Whereas in a very hot market, guys will say to you, look, we're available from, A to B. And then at the end of that contract, we've got another contract to run off to. So if you want us back, we'll be back in 6 weeks or 8 weeks. I think there's a better likelihood now, we're seeing anyway in Newfoundland where we're active, that people are able to make themselves available for a longer stint.
Right. So how do we look at you and what you're doing up at the Mother Lode project for the next 6 months? You got money clearly. And you told us about some of the things that you're out there, but are you reacting to market conditions in a way? And do you know? I'm trying to work out. Do you kind of just get your head down and say, right, our plan was this, let's stick to this, no matter what? Or do you actually have to be a little bit sensitive to market conditions because you're not quite sure how long these things drag out? Some would point to November, and others will point to end of next year. Very different sets of outcomes with a budget, right? Yeah,
I think that if you're running a junior, maybe any company, but certainly in my experience, if you're running a junior exploration business, you're not relatively dynamic what's happening in the world and in the business and in the market from day to day or week to week. Probably you've got blinders on. And I do think you need to have a longer term plan and a bigger picture objective. We certainly have that, but I think you do have to be nimble. And you have to recognize opportunities when they arise, maybe when it's better to sort of, pare back a little bit. And that runs the gamut for us in this situation where we have a fairly significant treasury from, what we're doing on the ground and the extent of our work programs to also having an eye on what else is out there. What other opportunities are out there on the cheap right now because, projects are in the hands of companies that are running into financial problems and maybe need to divest of one or two of their assets. So these kinds of markets create situations that you may not have had in your agenda 6 months ago in terms of what you were looking to do. Look, we had projects in the Dominican Republic that we liked, deal with Barrick that we like, Newfoundland acquisitions. We thought we had this all sort of wrapped up and bundled up and we knew how we were going to lay this out. Suddenly there's an opportunity potentially here now for us to continue on with those assets, but also we're being approached by people since we did the Barrick transaction and now we have money with people looking to maybe partner up or do some sort of a deal. So to answer your question, I think you have to be dynamic. You have to have your eyes and ears open to opportunities, and that sort of dictates how you deploy your work programs, your expenditures, your budgets, that sort of thing. So the short answer is we're continuing on in Newfoundland. The longer answer is there's lots of other things going on in the background that we may not have planned 6 or 8 months ago.
Right. Okay. So let me finish with this. Should your current shareholders be comforted by the words that you've just spoken? Is yours the right plan? Would you say to them, trust us, stay with us, it's going to be fine? And then also, what would you say to people who have offloaded? Should they be coming back to you, or are they right to be looking for better deals or waiting for the bottom of this market to arrive, whenever that may be?
Yeah, well, I mean, I'm biased, of course, but I mean, I think that we have seen these kinds of levels in terms of our share price in the past. And when I look back on all of these sort of, these down dips in our share price, never mind the market in general, but even our share price, there is a significant uptick on the back of that. Sometimes it's specific to the company and something that we've done. Sometimes it's the rising tide of the market, but I'm very comfortable that this represents an opportunity for some people. Depending on your risk profile, that's up to the investor to decide whether this is the point to dip your toe in the water. But we've got a significant amount of money in the treasury. What I like about that, and I think is important about that, is that came without any share issuance. So it's not as if we went out and doled out a bunch of cheap paper to get the capital that we have in the treasury now, and sort of everybody's price point is the current market price. We can see this going significantly higher from here based on how we deploy that capital, and of course the general market. So yeah, I think this is an opportune time for investors, both for Precipitate as well as a number of other companies that have been again driven down by sort of the prevailing sentiment of the market. And again, for us, what's going to be the tipping point? It's going to be news flow. It's going to be being proactive on the projects, generating news, advancing projects, and hopefully we can have that coincide with a change in sentiment and a turnaround in the general market.